Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello everyone and welcome back to this week's episode of the Security Token Show. I'm your host Kyle Sonlin, joined with my co-host and business partner Herwig Konings.
Thank you for joining us.
And we're beaming into you here from South Africa for yet another episode abroad, and we just can't wait to be in here today. We've got a great episode lined up for episode 102. The way that this show works, if you're new here, is we start out with our companies of the week. This is a segment where Herwig and I detail two companies that caught our eye that were making the biggest moves, and we break down why. From there, we go into the top 5 segment where we cover the 5 highlights that you just couldn't miss from the week. You need to check that one out. After that, Herwig then dives into the institutional moves from banks and financial service providers and what they're doing in the blockchain industry. From there, I go into the market trading segment and new security token offerings to see what all the deals and where the market's at. And finally, we close it out with our main topic, which this week is BlockFi. They've had some regulatory issues, and we're going to break down what happened.
Yes, they have. We've got a juicy episode lined up today.
Yeah, so I can't wait to dive into it, but before we do that, we wanted to mention that this episode is sponsored by The Exchange. This is a company launching a pretty innovative platform, and they are also launching a consecutive security token alongside it called Turncoin. And so it's best, I think, if you check out this short clip to learn a little bit more.
Grab your share of a platform that's transforming fan interaction, sponsorship, and fundraising worldwide. How? Invest in Turncoin and own part of the world's first trading platform for popularity called The Exchange. Now, anyone can monetize their popularity through The Exchange to create a new income stream. Whether you're a star or just getting started, you can engage with your fans in a whole new way by selling virtual stacks. Virtual Stacks creates a new fan experience that lets you own and trade a stake in your favorite people. As the popularity of the rising star grows, so does the value of their virtual stacks. Supporters can buy, share, and trade their stacks and access unique content that stars give to their stacks holders exclusively. Stacks issuers collect 90% of their initial sale and a fee on all future trades on the exchange. The ability to monetize anyone's popularity positions the exchange for exponential growth. The exchange collects 10% of every initial stack sold and a transaction fee of each trade platform-wide. Every dollar collected by the exchange is distributed back to its investors. Turncoin is everything you want in an investment. But Turncoin is way more than just an investment in equity or shares. All of the revenue of the exchange is distributed to Turncoin holders automatically every month. It's a compliant digital investment, accessible in over 100 countries, and is transparent by design. In fact, market leaders anticipate that digital investments will replace traditional stocks as a preferred method to issue, trade, and manage asset-backed securities. Join the Turncoin revolution today. It's your turn now. To make an investment, visit our website at turncoin.com.
Hopefully you enjoyed that video, and if you want to learn more about Turncoin, go check out turncoin.com. And now, Kyle, getting into this episode here, I'm really excited to tell you about my company of the week. Episode 102 is actually a repeat winner. I'm talking about none other than Mount Pelerin out of Switzerland, which has recently announced a partnership with the DeFi Jarvis network and to launch 3 different stablecoins, or J-Fiats as they call them, for the British pound, the euro, and the Swiss franc. And actually, interestingly enough, they are paired to the US dollar and actually the USDC coin powered by Circle and Coinbase. So I think it's an incredible new opportunity for stablecoins to reach. Specifically, the British pound and the euro are now highly in demand. And now I think it's one of the first stablecoins, as far as I know, around the Swiss franc as well. So this is some great innovation that users can easily go buy on the Bridge Wallet app. Super fantastic, good stuff by Mount Pelerin. It's my company of the week.
Awesome choice. Mount Pelerin, if you're unaware, is absolutely a company you should be watching. They tokenize their own equity, which is trading on Uniswap. They work with Realty to issue real estate security tokens. Now they're working on stable coins. They're actually issuing and shipping products in the space. That's really to be commended.
You can see why they've won a few times. Now, Kyle, tell us, what about you?
So my company of the week is Fireblocks. Now, Fireblocks raised $310 million. They are an institutional crypto custody platform. They only work with institutions. They don't even have a front end for retail to use. It's only institutional. Now, they raised $310 at a $2 billion valuation. And the idea here is that they actually plan to move into digital securities. So they've mentioned and noted specifically that part of these funds are going to be exploring how to provide services for the digital security space. This is a huge crypto custody provider, a huge player in the blockchain space that's going to be moving into digital securities, and we have to commend them as doing an awesome job.
I think that's an absolutely awesome choice, Kyle. Fireblocks, I think, raised $200 million earlier this year, so they've got a heck of a war chest. They're clearly growing fast. Now I believe they are officially in the Unicorn Club. That's an amazing, amazing job. So congratulations to Fireblocks.
Hopefully we see them offering services soon.
Now, let's get into the top 5. And getting into our top 5 headlines of what you need to know about the security token industry, we're getting off with number 1, BlockFi, which actually had a huge headline where New Jersey came out with a cease and desist order against the business. So they are no longer accepting new accounts in the state, although the company did come out and say that they're going to continue to fund existing accounts. So that's pretty big news, especially because Alabama and Texas came out and asked the company to explain themselves about what happened with New Jersey. We're going to get into all of that and more into our main topic in the show later.
You can't miss this one. It's juicy. And number 2, we're diving into INX. Now, INX raised $80 million through a security token offering. We covered that back on the show in episode 9. And now they've officially launched. So they raised to build a security token marketplace and exchange platform. They've successfully done that. And now their first listing officially through the platform is their own INX token. They've acquired Open Finance, so they're providing trading for those tokens as well. But INX is the main token that's now listed as of Wednesday. And we're going to cover all the details about how it's been trading in my market segment later in the show.
Yeah, I mean, it's actually the first foreign publicly SEC registered offering. So that was a huge accomplishment. And now it's finally live and trading on their own platform. That's pretty cool stuff. And getting into number 3, we've got Prime Trust, which is one of the leading API, escrow, and cryptocurrency custody and a bunch of other services platforms out there. And they've announced a $64 million raise. That's a huge announcement, especially because a lot of them are strategic investors. Some of them are Samsung, Kraken, Commerce Ventures, as well as 8 other different venture funds. So clearly they're looking to scale up and make a big mark in the industry.
Fantastic news. More money raised is a great sign for the industry.
Absolutely.
And number 4, we've got a lawsuit. This is coming from, or pointed towards, one of the largest venture capital firms specifically focused on tech and crypto. That's Andreessen Horowitz, or A16Z. Now, alongside Polychain Capital as well. And this is a class action lawsuit suggesting that there was some potential insider trading or market manipulation happening around a token sale that they participated in. We're not necessarily talking about a security token here. This was a potentially compliant token sale through the Internet Computer Protocol, and there was potentially some dumping that was going on, and investors aren't happy about it.
Yeah, they're throwing out a lot out there, something about $2 billion in alleged dumping and maybe something about securities violations and things like that. So we'll definitely keep you tuned on the show about what's going on there. And we'll do the same thing about number 5, which is Tether, the largest stable coin that's out there, has had an issue with the Department of Justice. So they've come out and said that they're investigating them for pretty much the worst possible thing, bank fraud. That's the last thing you want to hear about a stablecoin issuer, which its promise is that you're going to get parity on a one-to-one level for your digitized dollar. In this case, there may be some issues that we're going to learn about.
Yeah, so this is not great news, but that wraps up our top 5. You're going to have to tune in to next episode to hear a little bit more about some of these cases.
Let's get to the rest of the industry news. It's July's last week of industry updates and company announcements, and we're kicking off with an update on Binance. Binance, the world's largest cryptocurrency exchange, has been hammered this year, receiving warning from regulators around the world, including the United States, the United Kingdom, Germany, Hong Kong, Japan, and others. Now, the CEO has responded publicly saying it is seeking licenses in multiple headquarters. Zhao Changpeng, the Binance CEO, even raised the idea of giving up the role to a global executive with a strong regulatory background to help Binance pivot towards becoming a regulated financial institution. And this is no easy task, given the company operates in more than 180 countries and claims to serve more than $2 billion in daily trading volume for its customers. And next up, we saw an article on securities.io highlight recent developments on South Korea, Nigeria, and India's central bank digital currency programs, which are said to be ahead of the pack compared to many others exploring the technology. If you've got an interest in CBDCs like I do, then definitely give this weekly roundup a read, as well as this next article on CoinDesk, revealing that Bank of America considers CBDCs a, quote, much more effective payment system than cash, which I think we can all agree upon, but hearing it from America's second largest bank is a big deal. In fact, we have already acknowledged that the Federal Reserve is actively exploring the technology itself. And one of my most frequent companies of the week, Figure, has yet again announced another monster fundraising round. They've added another $200 million to their war chest from the likes of Apollo Global Management, Blockchain.com, Endeavor, and L1, among others. They'll use that to continue expanding their loan and fund tokenization platform, which actually completed the largest securitization of HELOC loans since the 2008 financial crisis. And next up, we have an announcement from Genius Estates, which is a real estate portal that is preparing to launch an STO platform for investment opportunities that can be viewed all in one place. Sometime next year, you'll be able to use their platform, which is currently awaiting approval from regulators in Estonia. But it looks like we can expect another STO portal to come to the market soon enough. And last but not least, I cannot recommend more Peter Gaffney's Tokenize This series on the Security Token Market blog. I'm not just saying that because he's on the Security Token Advisors team, but because I genuinely think this series breaks down the concepts of tokenization better than I've seen anywhere else. And with this week's 26th edition focusing on tokenized carried interest, it makes for a good one. Now, this term, carried interest, is a fund manager term for the profits earned on investments shared back to the fund managers after investors of the fund are paid out. Typically, a fund is paid a management fee to operate annually, while the true gains come from the performance earned on the investments they make, aka the carried interest. And now funds can tokenize that carried interest to leverage an earlier payout or get an even higher return from their investment, as others are willing to pay a higher premium to participate in the carried interest returns. Definitely recommend checking this one out. And for now, that's all I've got for you. Let's get the latest STO and market updates from Kyle.
And to kick off a new week of security token offerings, we begin with our sponsor of our trip out here in Africa, The Exchange. The Exchange is building a platform to enable people around the world to buy virtual trading cards of any athlete, musician, celebrity, or influencer. And the idea here is that anyone can launch their own sale of trading cards, known as virtual stacks. And fans can buy into the initial offering or trade on the Exchange's secondary market. It's a very cool idea, but it's actually not the main focus of the conversation today, as I want to bring to your attention the company's security token offering called Turncoin. The exchange generates revenue through taking a portion of the primary sale of each virtual stacks offering, in addition to a transaction fee on traded virtual stacks through the platform. Instead of selling equity in the company, Turncoin represents 100% revenue shares in the actual full operation. The total of 1 billion Turncoin in circulation will have the rights to every dollar brought in through the exchange's platform, and the company actually only plans to sell a fraction of the total minted tokens, with about 12.75 million available in the public sale. Pre-registration for the offering starts today, so do your research on the deal at turncoin.com and learn more. It's your turn now. Our next offering comes from Broadway Energy, a New York State-based energy consulting company providing energy management products and services for businesses and homes across the country. They plan to launch solar roofs and other green energy solutions to their customers. And on top of those forward-thinking products for green energy, the company is also going to be tokenizing equity for their next fundraise. There aren't any details on the terms of the deal or exactly how it's going to go down, except for the fact that they will be working with TAP, TAP, short for Tokenization Asset Platform, based out of New York City. I'll keep you updated with anything else I can find in the coming weeks. And finally, to close out my first section of the day, we end it with the official announcement from Securitize that their 2 cryptocurrency yield funds, backed by collateralized Bitcoin or Circle's USDC stablecoin, are now live. With only a 50 basis point management fee and significantly higher yields than similar products that are on the market in the traditional sector, this product is poised to attract a lot of institutional attention from parties who want exposure to the crypto industry and collateralized yield opportunities without taking any of the counterparty risk. An interesting deal, and one you should definitely read more about on securitize.io. Rolling on into our market trading update, I first have a few articles we need to cover before looking at the numbers. First up is Uniswap Labs, who has come out and announced that they will now begin restricting the trade of certain tokens. This comes on the heels of Gary Gensler, the SEC commissioner, denouncing synthetic crypto securities. And a few protocols like Mirror Finance, which were offering synthetic public stocks through a DeFi platform, have now begun getting censored by Uniswap. Now, censored isn't a perfect word to use here, as Uniswap is a decentralized and permissionless protocol, meaning that no one can prevent an Ethereum token swap on their protocol. However, Uniswap Labs, which is the company behind that protocol, operates the largest trading portal that accesses that DeFi application. And this is where the batch of tokenized stocks will be censored. Presumably, this is to cover their butts. You can still go to a third-party platform to trade some of these assets because they're Ethereum-based, but if you go down that path, proceed with caution. Especially in crypto, using unknown platforms can lead to stolen assets and hacks that, unlike security tokens, cannot be recovered. This is a very interesting domino, and we'll be watching very closely to see if there's any ripple effects for the security tokens that are trading on the platform, including Mount Pelerin, Relio, and others. So far, so good. Next up is the first episode of Token Tuesday by Security Token Market's newest data analyst, Samuel Sachs. Sam broke down the T0 token, detailing the history of the company, the underlying asset, and the investor protections on top of trading details. From there, he even actually did some basic technical analysis to give some thoughts on where he sees the future token trading as we move forward. Obviously, entertainment purposes only. He'll be doing this series weekly, and if you're a trader, this is awesome information that you should definitely check out to fill in any gaps you might have had about the industry's largest marketplace and one of the biggest assets in T0. The final piece of news comes from INX. This has been an awesome story to watch as INX has successfully raised over $80 million in a security token offering with plans to launch a security token trading platform. We first covered the company back in episode 9 of the show, back when the company had just announced its plans for a fundraise via a security token. Well, in the 2 years since and nearly 100 episodes since we last covered them, the company raised a ton of money and is now officially listed for trade. INX listed Wednesday morning at a price of 90 cents and a market cap of $111 million on their own platform. And that price has risen to $1.55 at the time of recording to bring our total market cap up to $887 million. That was a huge boost to the market after a 50% decrease from Blockchain Capital this week, which had its price crash after what seemed like a very artificial price rise from last week that I mentioned in my previous market trading segment. Another notable price increase was from Science Blockchain, which officially had its first few trades on INX as well. The price doubled from $1 listing price a few months ago to $1.95 as of recording, bringing its market cap up to $31 million. Then on the tokenized stock front, we don't have any new Binance data, of course, because they pulled out, but from a top 5 from FTX, it's yet again led by Grayscale Bitcoin Trust with $5.5 million in weekly volume, double second place Alibaba. NEO, Tesla, and Apple rounded out the top 5 with about a $14 million total volume between those 5 in just the past week, which is still very strong volumes from the tokenized stocks, which continue to lead the way in trading volume for these assets. And that's it for our market trading segment this week. Hit me up on Twitter for all your hot takes, and now let's move into the main topic. So moving into into the main topic of the Security Token Show, episode 102. We're going to be covering BlockFi and some of the regulatory issues that they've been having that have sprung up recently. And Herwig, I was hoping maybe you could start it off by giving us a synopsis on what's been going on and lay out the current situation.
It would be my pleasure. It was our #1 headline this week. BlockFi is having some issues with not one, but 3 different states. The main one is New Jersey, which came out with a cease and desist order asking the company to stop offering its services in the state. So they are no longer offering new account openings, but they are going to continue to fund the existing accounts there. Now, this is a big deal because Alabama and Texas took notice of this, and they're saying, hey, what the heck is happening? You need to explain yourself. One giving them about a month, and the other giving them till about October to make sure that they have a case about why their interest-bearing accounts, which allow you to basically deposit Bitcoin into in order to gain interest for, are actually securities. And therefore, this entire time, the company has been advertising securities that are not registered, which means they've violated, of course, a host of different securities laws, which is, of course, a big, big problem for a company that has raised over $500 million in venture capital funding, has lent out billions of dollars in these different services. So I'd say that's a pretty big problem, right, Kyle?
Yeah, this is really a complex thing to break down. So I think maybe where we can go from here is breaking down the history of BlockFi a little bit. BlockFi was founded in 2017. The idea here is that they were going to lend fiat against crypto collateral. So you take your Bitcoin and you can stake it with them and they'll give you cash in exchange for that. And they've built a full business around that. They've raised over $500 million to date, and they offer this interest on collateral that you stake through the platform. And their model revolved around offering this, taking in additional venture capital, as well as potentially arbitraging the price of Bitcoin based off of the assets they had in order to fund the products. And so what happened here is that through this platform and as they scaled, they launched something called the BlockFi interest account, which is really kind of replicating what would essentially be a savings account through a bank, where you're depositing crypto into a bank account and you're getting interest on that asset that you've collateralized through the platform. So you're not necessarily getting a loan for it, you're just depositing crypto and getting rate of return on it. This is called rehypothecation, and the Jersey regulators are having a little bit of an issue around these specific structures because they may potentially be securities. So this is really where a lot of the issues lie, on top of the fact that there were some issues around the collateral that they were advertising. They actually were advertising on their platform that it was US regulated because they were compliant with money transmitter licenses and some of these things, but they don't have a banking license and they certainly don't have a broker's dealer's license to sell securities, and they weren't advertised that way. So the Jersey regulators are having some issues alongside a couple others.
Yeah, and who knows what other states might jump into the foray as a result of this. And needless to say, it's definitely a case that BlockFi now needs to make very clearly that their interest-bearing accounts here are not securities, or at the very least, we might have a banking issue where they might actually have different licenses that they now need to go at, potentially a federal charter, which is one of the most difficult to get of all. Now, there was one more issue that the company was facing as well, because they might have been a little misleading with the idea of saying that they're U.S. regulated. Now, we do know that they have some money lending licenses and other different things, but saying that they are a U.S. regulated entity perhaps was misleading of some sorts, given the activities that they are promoting and offering, especially if they end up being considered securities. And so that could be a big problem, because that would mean potentially rescissions, certain accounts having to be canceled, a whole new operational process potentially for BlockFi, fines and other issues that might be as a resulted by the SEC and other regulators that get involved. Anyway, hot water for BlockFi right now.
And this is a bigger issue as well for BlockFi as a business, right? Because whether they're actually operating as a bank or not, one big issue with creating accounts like this is bank runs, right? This is where people all try to pull out their money at the same time. And because BlockFi has been doing this rehypothecation, which is this idea of they can lend out the money that you give to me, right? This is kind of like how a bank makes money, is by potentially taking the funds that I stake and then lending it out to somebody else. That's a reserve ratio, right? They may not have 100% of the collateral in their inventory. So if they potentially have some issues here, they've already stopped serving any new customers in some of these jurisdictions. They've already had some negative press around reducing the interest rates that they're providing.
Right.
There's some issues here that are maybe more fundamental, that they're at risk for some kind of insolvency, which would be really a risk for the company. They need to figure out what their strategy is going to be there.
Exactly why I think these regulators are looking so closely, and why they need to explain themselves, and why there might be some clarity needed on what type of services are these considered. On the banking side might be a whole host of different things. We know on the security side, the SEC is most likely going to use the Howey test, right? Seeing whether there was an investment of money. In this case, definitely Bitcoin being deposited is potentially some sort of value, right? Is there an expectation of profit? In this case, they're clearly advertising new percentage rates, 6.3% or whatever you can get on your accounts. And then finally, there's definitely a common enterprise, because BlockFi, as Kyle just explained, is in one way or another going out and finding a way to give you the return that you're looking for. So potentially there is a case that there may even be a security type issue here. We certainly don't know. We're not attorneys, that's for sure. But we are certainly keeping aware of this issue, and we will keep you tuned on the show as this issue progresses.
So we'll definitely keep you updated, but that's about it for the Security Token Show. We really appreciate you tuning in. We have a whole host of content we'd love for you to tune in for. This is obviously Friday mornings Eastern Time. We have a Twitter Spaces event on Thursdays where we cover the previous week's main topic and dive into all the fun stuff there, and a lot of other awesome content that you can find through all of our different channels.
If you have any questions, or if you ever want to reach out, Kyle and I are available on LinkedIn or Twitter, and we'd love to have you join us in the community at stomarket.com, and hopefully we'll catch you next Friday.
Happy tokenizing.